So this is weekly commentary 49. Now, this week, well, the week that's coming, this is going to be the week that, this is the week that we start to dial in very hard. Now, January from the daily chart, we can see is being very lackluster, right? If I just remove this, you see the daily candles, how wicky and small they are, right? If we compare, this trading with the candles up here, you see how just one candle is like the entire weekly range. Now, this fair value gap is a monthly fair value gap that we had outlined for a few weekly commentaries. Now, this week coming, right? Why is it important? Now, the first week of February, the first day of February, actually, we're going to have the FOMC meeting. Now, this week, if we look at the weekly profile, now remember, for the guys that are caught up to date, chapter 6, lesson 2, that video, I mean, it exhausts everything that I could possibly teach you guys, right? Now, I tell you guys all the time, you have to respect the economic calendar. Without this calendar, you don't know when things happen, when to expect what. It all stems from your weekly profiling, right? If your weekly profiling is pretty weak and you'll pretty much struggle to dictate some sort of intraday bias. Without an intraday bias, you're kind of flat on your feet. Now, whenever you start the week, I want you guys to look at your economic calendar and see the days where the days are mild, right? So you see like Monday, Tuesday is pretty mild. We do have the consumer confidence here, but that's irrelevant in the face of FOMC. Now we have FOMC on the Wednesday, and that's for the USD. And on Thursday, we have the Bank of England and the European Central Bank making their statements and their rates. And on Friday, we have NFP. Now, what type of profile do you expect? When do you expect the volatility to kick in? When can you expect, the manipulation of the week to kick in? Your opposing end of the range, the Judas swing of the week. So that's the high of the week on a bearish week and the low of the week on a bullish week. That's manipulation. From the opening of the week to that point, the opposing end of the range, that's manipulation. Now you guys have to kind of sieve out when is the likely manipulation for that to occur given the economic calendar. You see how the economic calendar doesn't fill in the gaps entirely because we need to see how the trading, the candles print, but you see how it fills in a lot of the gap where you can start to make very strong educated guesses and you can, balance probabilities into your favor where the opposing end of the range is going to be met. Now, in saying that, I want you guys to understand this. Monday and Tuesday, you can find, some scalps, intraday trades, especially just with this one USD event. You can find, London close kill zone. You can find a pretty sweet trade probably off this. Now, going into Wednesday, Thursday, and Friday, how many of you guys can exercise your patience and not click buttons? I want you guys to do this, right? I want you to, if you can, because I know a lot of you are, tied down to work and other commitments, attend the sessions. Wednesday, Thursday, and Friday, I want you guys to just attend the sessions. You're not pressing no buttons. Now, this, right? If you can do this, you will enter a kind of a new realm of your trading. Not in terms of your technical ability, in terms of your trading mindset. Now, that, in my opinion, holds just as great of a weight as your technical ability. The technical ability means nothing if it's used by a trader with the wrong mentality. Now, when you see the central bank making their statements, remember who owns the currency, right? On Twitter, there's guys talk about counting candles and there's people speak about algorithms and stuff like that. I'm telling you guys right now, right? It's all central bank level. The central bank own the currency. If you study economics, even just to an A level in the UK, if you just study economics to a college level in, if you're from the United States, you learn that the central bank has specific roles. They own the currency pair. They manage the exchange rate. It's their job. It's their job to facilitate trade, imports, exports. They need to, facilitate, control that exchange rate, right? It's all central bank level. JP Morgan and all these big hedge funds, what their algorithms do is they trade. Their algorithms aren't delivering price. There's a clear distinction. Their algorithm their bots that they use is either for two things, right? And there's guys in here that have backgrounds in these type of things, and they're watching this, and they will agree with what I'm going to say right now. The two jobs that these algorithms and bots, they, JP Morgan and such use, is one, it's either a tool for the trader that's trading. What I mean as a tool is this: they'll have a software, right? And the algorithm will pick up certain patterns and whatnot, and it's kind of like Vinny E Mini's algo box if you've seen that type of thing on Twitter, right? Now, that is a tool to the trader for the trader to execute. That's one side of using an algorithm to trade. The second thing is this: the algorithm is and the high frequency trading bots is doing the trading for the firm, but it's trading. It's not delivering the price. We care about what's delivering the price. It's central bank level. Now, when you see the central banks are making these statements, what do you think is going to happen? You're going to get choppy conditions. These aren't conditions to trade. Remember, you're trading the forex market predominantly. I know there's S&P traders out there, but remember, these markets, they're not made for us to trade. A lot of them are, you know, measures of economic health and whatnot, right? There's other reasons. When you realize that these markets, they're not predominantly made for retail to trade, but we can trade them, you'll shift your mind to saying, perhaps this isn't a day for me to trade. A lot of noobs, they come in and they think they can trade every single day. Don't do it. When you see the lineup of this FOMC USD and you see the monetary policies for GBP and Euro following after, how do you think Euro USD and GBP USD is going to trade? Now, in seeing this, right, what do you gain if you sit out of these 2 days and you see that the rate that the USD do is greater than the rate of pound and euro? Isn't that like, chapter 1, lesson 2, interest rate differentials? What happens then? The USD's interest rate is greater than that of the pound and euro. What do you expect for the major pairs? To be bearish, and you make a narrative. You see, some days are just there to sit out and to gain a narrative. 1 weeks of trading, and I'm going to show you on the technicals what I mean. We're letting half or the end of the week trading to go to set you up for clear, you know, buyers to trade in line with for the next week. It's a fair trade-off, and I've said this so many times inside of the mentorship. Right now, on Friday we also have NFP. um, Again, it's a no-go zone with the NFP as well. Exercise your patience. You see, in the coming week, it's a lot more mild. You see how, there's barely nothing there. You see this week coming, this is purely manipulation of the month, probably, right? You see how this week, if you see what this week's taking you, you see how this week, you see how far we're looking into the future. We're looking for 2 weeks now. Think of this as letting one candle print, and this is the candle that you're going to try and basically trade in line with. Now, if we go to a technical standpoint, right, and we've had this, we've looked at this for some time, right, and it's been very slow. We had this fair value gap, right? Now, I wanted to see the opposing end of the range being made inside that fair value gap, but it's just very small daily ranges. Now, one thing that we did say, if you want to fact check this against the previous weekly commentary, I said, right, from last week, I want to see Tuesday put in the opposing end of the range and not Monday. The reason being was because Tuesday has the manipulation. It had that red folder, right? And it did do that. It just wasn't inside of the fair value gap. Now, if I just fix this here, I want to see that run into this sell side liquidity pool. Now, this, right, is kind of reinforcing a support level. Retail traders, especially the ones that look at higher time frames, they're going to see this little bounce as holding as support. The sell stops here are building up, right? I want to see us, sweep into here, and this is the monthly fair value gap. Now, I want you guys to hear what I'm going to say. On FOMC, a new candle is going to open, a new monthly candle. Now, this area is so important because this could be possibly the low of the year. It could be the low for a very long time for the DXY. Now, if when I'll tell you exactly what I'll do. When Wednesday happens, I'm going to go on the monthly chart and I'm simply going to mark the open of the candle. And I'm going to treat it like a midnight New York price. And you're going to see this kind of theme and genre right now in, as you're going through the mentorship, because you guys are developing a lot now. Well, the guys are up to date. So I'm going to give you guys, the more, you know, call a technique to consider to increase your accuracy. Because the thing is this, I can't, there's no point of me giving you guys the very accurate tools right now because you're just not developed enough. You need to make a foundation, understand where price is going, and then focus on accuracy to attack your bias essentially. Now, I'm going to mark out that open on Wednesday. And that open of the Wednesday, I want to see the monthly candle sweep into this fair value gap. And if we reject away from it and March follows it, we've made a swing low IOFED, sweeping this, weekly low, monthly fair value gap, right? And we can offset the move this here, volume imbalance, right? And we want to move back up into this candles imbalance, right? That's what I want to see technically on the higher time frames. This is what I'm waiting for. Now, if we go on a weekly, still mark out this fair value gap, right? I'll mark out so you guys can just bring it across your charts when you see this. Mark out this fair value gap. It's still there. Now we can run this fair value gap. We can run this week's high into it. Focus on this area though, right? Now one thing that will very like that I'd love to see is this. If we move down into this monthly fair value gap on the weekly, and we displace the way higher. And if we displace through this fair value gap, and see how specific I'm being, right? If we trade down here, sweep this sell side liquidity pool, and then we have a displacement on the weekly time frame through this imbalance, like we just trade through it, I would be very bullish on the DXY, right? Now, one thing I want to take your attention to is this US 10-year. Now, US 10-year, when we see FOMC, our brain straight away needs to shift to US 10-year. Reason being is interest rates. Now, what type of candle do you see is present on the US 10-year? The high is intact and the low isn't. The low is intact as well. This is an inside candle. Now, what does an inside candle show? It shows accumulation, right? You see how we're still accumulating inside its fair value gap, right? And FOMC, you see, is still on my chart from the last weekly commentary. It's consolidating for FOMC, and I still expect it to consolidate, or it could perhaps manipulate for before FOMC. Watch this chart, right? Focus on this chart before you're focusing on the DXY in terms of when you want to see direction for the long term. Now, for the S&P, I want to see the run possibly on here. If we see this, right, this high, I believe is the old monthly high from last month. We have a fair value gap from this candle's high to this candle's low. On Euro, right, if we go to the weekly chart for Euro, we have a redelivered rebalance, right? Now, why is this a redelivered rebalance? This candle's wick, right? You see how this candle trades through this entire candle's wick? Ignore that, right? That's a fair value gap, right? Here. Now, there's also one here, right? You have this is a rejection block, order block, being the body, fair value gap, right? If we go to a daily chart, you see how we're just, making a swing high. We can offer retracement down more into here, into the weekly. Focus on this as well. There's been a breaker block, up candle, right? Run on sell stops, higher high made. That's your order block. There's also a fair value gap here to pair with that alongside with it. Pound, I saw this small fair value gap from here to here. We didn't quite fill it from there. We moved away. I'd favor Euro USD over GBP USD for this week from the weekly timeframes. Now, a lot of you asked me to touch on cryptocurrency. Now, we had this level marked out from last week, right? We had this, if you go on a monthly chart, I believe it's the rejection block. Right, we had this rejection block. Now, FOMC is also going to, find its way into the crypto market. If you are a crypto trader, you still need to respect the USD folders because that is going to drive, your cryptocurrency market. Now, if we go to the 4-hour chart, you see how we're just consolidating inside here. Now, with consolidation, we can see a final run higher. And if we displace lower, you see how it's just a market maker sell model, right? You have the initial consolidation here, expansion, consolidation, expansion, consolidation. Now we can expand one more time because we have the manipulation factors from the, economic calendar into this, deeper here. And then if we offer the smart money reversal, it's going to be a long ride back, probably down to, 16,000 for Bitcoin. Now, before we close the weekly commentary, I really want to go through this with you guys. I'm just going to remove all of these things here, and I want to touch on something with you guys. So this was this week's trading, right? Now let me go and put on Sunday's opening price. Right, so you see this little candle here, this tiny little candle here, this is Sunday's opening price, right? And it gapped down. Now, I was expecting a bearish week. Now, this is how you use it. And if you guys watch chapter 6, lesson 2, this is a good case study for this. Now, you see how I anticipate a bearish week, and I'm anticipating bearish weeks on the DXY because I'm attacking that monthly fair value gap. So I'm expecting, because my draw on the monthly is that fair value gap, it only makes sense for me to expect weekly candles to print lower, and we can only expect retracements higher if there's fair value gaps to fill, right? If you see the last few weekly commentaries, that's essentially been the theme. Lower candles. From the last week's candle, we had a fair value gap, so I said watch that for a institutional order flow entry drill, but overall to continue down lower, right? You're bearish. If you're bearish, it's this, and it's the opposite true for bullish. Bearish until your sell side liquidity pools hit. If there's a fair value gap open before your sell side liquidity draws hit, you can offer, if a retracement is offered, expect it to that fair value gap, institutional order flow entry drill, and to continue down lower until your liquidity pools hit or your high time frame PDRA is met. Now, using Sunday's opening price, this is like our midnight price, right? This is like our midnight price, but for the weekly profile. Now, what helps is this: when we have it like this, right? Above is going to be the Judas swing for a bearish week. And you can frame, Monday, Tuesday, Wednesday, Thursday, Friday with news events. So let's say Wednesday, Thursday, Friday for this week is going to be FOMC, Euro and Pound Bank, NFP, right? So you know that the swing, right, the majority of the expansion is going to be throughout these three rectangles, right? You'd probably see some level of accumulation, right? Now, for this week, we knew that Tuesday had manipulation, right? If you go on the 24th of Jan, we can just go on it here, to be honest. One sec. Right, you see how we had all of these things, right, for Jan, right, for the pound and for the USD, and we knew that that's probably going to be the manipulation factor for the weekly profile, and it was. So we expected Mondays had to get traded through, and we see how it's above the Sunday opening price, and this is, where we expect the manipulation to be, right? Now, when we had that low high and we displaced lower down here, right, you know that this displacement candle probably going to go and break this low. When I see displacement candle like this, right, and it's in line with what I'm expecting, and it's off a PDRA and etc., I don't have to wait for this low to be taken to entertain bearish breaker and understand reversal. I can, confidently, estimate that this is the opposing end of the range, and I don't need to wait for this low to get taken. I can get retracements, fair value gap to get lower again. Now, what threw me off was this, right? On Friday we had a news event as well for the week that has passed. Now, Wednesday traded lower, and I thought, okay, we're making our way to that fair value gap, and we'll get there before FOMC. Now, Thursday, you see how Thursday moved back into the range. Look at this here. Wednesday traded down lower, took out the low, and then we traded higher again. And now you see how we're consolidating on the Friday. This is a seek and destroy profile. And up until Wednesday, right, up until Wednesday, when Thursday happened, this should have told you to automatically stay out of Friday. Because where is Friday likely to go? If you take out sell stops, then buy stops, and you come down retrace in the London kill zone, where is Friday likely to go? There's no side being favored. If no side is being favored, there is no trading opportunity. Now, on Thursday, which was the day of my flight, when I was at the airport, I was, commentating. If we go on a 5 minute time frame, we can actually check it out together, right? 7 o'clock. Let me go back onto the 5 minute chart. From here, right, I was expecting to be bearish on the DXY. Now, if we match this time on Euro, right, if we go to the Thursday on the 5 minute chart, on the Thursday, I was expecting, bullish Euro to carry on because I thought, Tuesday put it in the opposing end of the range, and I thought Thursday is going to expand lower and make the at least the low, or Friday will continue it, right? Now, this is what I was expecting. When we're moving down here, right? This 8:30 was a news driver, and if you go on the Telegram group chat, I say it very specifically. I said, it's offering a market maker buy model framework, and I'll show you why I said that. If we put a line from here, and remember at 8:30 we know there's a news event, right? So let me just put a trend line here just for visual representation. We know there's going to be thingy. Now, if I line out midnight opening price, and remember my underlying bias and my narrative for the day was lower prices for Euro based off the weekly profile. Now that's going to be Sunday's opening price, right? I mean, midnight's opening price, sorry. Now, this is what I was expecting. Inside the London close, this is what I was expecting. At 8:30, we knew that we can get a leg lower, right? We knew that we can get a leg lower because there's a news event. This, right, low, it's very unlikely to be the low. Understand this. When there's a news event, and even in line with your bias, unless there's a strong market structure shift with displacement, and I was I was saying very specifically, you're waiting for market structure shift, with displacement. And 8:30, you want to wait after you to see that. Now, when we see this, right, when this fair value gap was created, right, I said, mark out this fair value gap, and you're waiting for that move back into the fair value gap. And I was expecting a market maker buy model, and I was targeting, basically this high. Now, when we dipped into this fair value gap and we expanded away, yeah, we stayed here. This candle, I was anticipating this candle to carry on and run these relatively equal highs here, and we didn't. Now, when we ran lower on the higher time frame, if you go to a 4 hour chart, just remove these. This is what it looks like on a 4 hour chart, right? When you get a candle going up, then a candle going down, and then a candle going up, you know that inside of the 15-minute time frame, 5-minute time frame, but this is a 4 hour chart. If you're going up, down, what does that mean? It's essentially a consolidation. That's what a range does. Now, if you go to the 1 hour, remember, it was seek and destroy. What do you think you'll get as well? If dollar's in a seek and destroy, euro is going to be in a seek and destroy. You see how we're running highs, right? Buy side liquidity taken, and then they go and run the low. This is not framework you want to work in. Understand this, right? And I haven't used this analogy in a very long time. When the rattlesnake shakes its rattle, it's danger. It's for you to stay away. The market, when it enters a seek and destroy profile, stay away from it. It's like a sign to the more, to the traders that deserve it. To the traders that deserve it, the warning, they benefit from this. Stay away from seek and destroy profiles. You want to see this, and it's so simple and it's so effective. It's just human error lets us not execute it. Wait for a clear side on the daily and the 4 hour to be favored, right? You're waiting for that. If that is not offered, don't entertain any trade, right? Unless that's not offered, wait until that is. And usually it's a few candles. If you see on a 4 hour chart you're in a consolidation, you'll see within 3 candles, 5 candles, it will displace in one direction. Just because of how the news events are scattered throughout the week, right? Every, 5 to 7-ish 4 hour candles, you get a news driver in throughout the week, given that there's, a few news events scattered throughout the weekly profile. That's what you wait for, right? You're waiting for price to meet time. Now, the time aspect that we're waiting for this week is what? Midweek. Expect the volatility to be left for the FOMC, for the euro and the pound banks, and for the NFP. Tuesday, well, Tuesday could go in a range for Wednesday. This is how I think about the weekly profile in my head all the time. What does that show? Monday, you can probably find a small scalp. You know, If a day is going to go into consolidation, it will be Tuesday for the FOMC. Wednesday, New York session is a complete no-go. Perhaps in London you could find something, but New York will consolidate for the rest of FOM for the FOMC. That's at the later end of the day. So a Wednesday, London small scalp. I'm talking 15 pips, right? 20 pips, if that. Monday you can find probably a day trade. Work off your 4 hour PD arrays, right? Now, if we go to the 4 hour on the DXY, you can favor a move back to this discount, right? A move back to this discount. You see this candle, it looks like we're going to offer a retracement from this low to this high. You can offer back to the equilibrium or to at least the discount of the range. Now that 1 4 hour move back to the discount or equilibrium, that can lead to a small intraday long on Euro USD. Exercise your patience and trade with caution. Believe me, not every single week is you gotta push, like foot on the gas very hard in trading. The week after, remember what we showed. The week after is very mild. It's going to be a lot more easier. There's a lot less roadblocks in the way. Let them show their hand with the interest rates. It's going to be a clear, well, I'm assuming and hoping it's going to be a clear repricing for where the next weekly candle after this one is going to go because of the volatility in this. We can expect a very large weekly range for this week at least, right? And in that, you can work with that next week to know where the next candle is likely to go, right? So that's going to be it for this weekly commentary. Hopefully, from the next ones, we can start seeing clear fair value gaps and expansions. Now, remember, if you want to entertain anything, you could work off a 4 hour, this DXY to come a bit lower and a small scalp on the Monday for Euro. I recommend turn up to the sessions. Have a go. It's here right now. It's maybe going to reprice here. Watch the moves into fair value gaps. Have your framework. I want you guys every single day. Have your bias that you're favoring. It should favor this side over this side. Have your midnight opening price. See the Judas swing, that fits your daily narrative and see when your bias is looking like you're looking for displacement in line with your bias. See the market structure shift offered. Look for the moves back to fair value gaps and breaker blocks and mitigation blocks and whatnot. This is true practice. Do this for a month. If you do this every single day for a month, turn up to the session, midnight open price, and you get familiar. This is pattern recognition. Getting familiar with how price is moving given midnight opening price, how prices, the do the swing given your bias, the displacements and move back to fair value gap. This is real pattern recognition. The arrays and stuff, this is like beginner level stuff for pattern recognition. What I just said now, this is the pattern recognition you guys need to work on. So I'll leave you guys with that, and until next time, and I'll see you guys in the next one. The reason we didn't look at the COT data is because it's still flat for Euro, so it's pretty irrelevant. So yeah, until next time, and I'll see you guys in the next one.